What's going on, guys? This is RP. Welcome to the channel Bro Billionaire. Have a good evening. So we are going to discuss in this video Nifty's move for the next session. So tomorrow is 24th March. That is weekly expiry. So let's analyze the Nifty's move for tomorrow. What we are seeing here is somewhat dark cloud cover formation. So this is a two candle pattern. So the pattern is somewhat similar to dark cloud cover, which indicates a little bit bearish bias. But yeah, that is not yet confirmed. As per the classical analysis by the price action, we see here Nifty is in major channel trend. It has broken it once, but we are seeing here another channel where it could head and then it could drop on the downside and making a new low as well. So that is one thing that we are expecting. So here we have already discussed these things in the video which was created for Holy special analysis. We have created that video. You can watch that video from the link above. You can also visit our channel and watch those videos. So this is the video on the Bro Billionaire channel. We would also ask you to watch this video of option chain to understand the option chain and how to work with the 1:30 p.m. strategy. At 1:30 p.m. there is a reverse move, so you can watch those videos as per your convenience. So as we said here, we are looking at a channel bound movement of the Nifty, and for next session there looks to be a bearish pattern formed here. Let's confirm whether it's bearish or it can go up. The next chart shows you here that so what we have done is we have plotted a move of this particular. We are going to discuss this move first, and then we are going to check another thing for next, like on 15-minute chart, we'll check how it is going to move. So this move we'll discuss now. So the chart here is plotted from 15,000 low, 15,671 low. Here we see A, B, C correction. Okay, this is called as W wave. Notice here B wave is a triangle, so I'm not plotting them as a bullish impulse count. So then there is a connecting wave X. Then again there is a Y correction where there are ABC. B is again triangle here. So then there is a connecting wave of X, which is called as WXY. Okay, so this is the X wave. So as I said, and after that we are seeing the Z wave ABC. Okay, so this is how the moves are expected. So as you can see here, currently we are in a correction WXY, right? So this is WX, Y, XX, and Z. This is how the moves are expected. Then the down move is expected. So for tomorrow's session, we can see here that currently B wave may be completed and C wave is about to start. So that is what we can expect. Okay, so once it breaks this level 17,307 or 308 to be precise, 17,308, if it breaks that, we are going towards these levels 17,800. Okay, so almost 17,800, we are going towards that level. That's what we can assume. It may not come in a single day. It might take another session to go there, another 1 or 2 sessions it could take to go there. Maybe by Friday end of the day or Monday morning we could be there, and then we could start the fresh drop. So that's what my assumption is based on this analysis. So this is one case, and or you could say this is a bullish case for next 1 or 2 days at least, going 500 points up. That's what we are assuming here. Notice here MACD has given a divergence which is showing us the lack of momentum, meaning to say that MACD is going down while the price is going up. That is considered as a negative divergence. So prices usually fall after 2 or 3 divergences. So hope you understand the moves here of W, X, Y, XX, and Z moves. Okay, so tomorrow one way upside could be there. If it opens gap up above 17,300, then it could rally up towards 17,500. We could expire somewhere near 17,500. That's what we can assume for tomorrow. So this is a bullish case. What could be the bearish case? Let's discuss that. So let's concentrate on this area now and see in the chart what's happening here. So on that chart, you see here I have plotted A wave as a 5-wave sequence, 1, 2, 3, 4, 5. So A wave is a 5-wave. So this move is expected to be a zigzag correction, A, B, C. Okay. So here bearish, in a bearish case, at least for tomorrow, what we can expect is if Nifty manages to break 17,199, then we can assume that this particular fall is still left, and here it could be a W wave, and we could be doing a double zigzag correction downwards. Okay, so here already A, B, C moves are seen. Okay, which is 5 3 5 structure. Okay, this is one W, this could be then X, and this could be a Y wave. Internally it will have A, B, and C. So we have to wait for a break of 17,199. A would break in the opening itself. If it is going to go downside, then in that case for a downside we are expecting 17,064 as a target. It can go closer to this, but it should not break this level. That's what we can assume. So this particular bearish case has low probability, and it would be very risky to go for these levels. Okay, so it should open flat to gap down and break this level 17,199. Then it could give the retracement, and then it could go downside. So that's what the assumption is for bearish case. This will be a double zigzag correction on the downside. Then we would go on the upside towards these levels. So in that case, 17,800 target will reduce maybe by the some points, or even it can hit that target as well. There is no restriction to that, but I would expect it to go less if it goes till 17,064 in a B wave. So this will be an entire B wave. Currently we are assuming that it is completed here as per the bullish case, and if it breaks this level, then expecting downside towards 17,064, not expecting break of 17,006. Okay, if that is the case, then we have to do the recount. Our analysis could be something wrong, and we need to do the recounting. So that's how we are expecting Nifty's bearish case. So for another thing that we need to discuss here is okay, this is I think same chart. Yeah, so same chart for bullish case we have plotted here Fibonacci extension. You can see that Fibonacci extension, when you plot from these on these 3 points, you get C wave 100% retracement at 17,635. So this is the minimum expected level on the upside, and 138% or 1.382 Fibonacci extension is at 17,800. So that is what we can expect for the C wave. So this particular move can be like this. Okay, tomorrow it could go like this, it drop again. So this will make a leading diagonal. So this will be wave 1, this will be wave 2. Then again, it could go like this in 3, 4, and 5. So like this, it can go as well. So tomorrow morning, if it breaks as well, you have to be careful. There could be a chance of forming leading diagonal, and it could spend entire day tomorrow in a leading diagonal itself. So you have to take care. This could be a consolidation bullish case. So it will be flat to bullish in the case of leading diagonal pattern in the wave 1. So this is how another move can be considered. But yeah, in that case also it will be bullish going upside. If that pattern forms tomorrow, we will have a zigzag movements, and it will be very volatile session hitting the stop losses. So hope this doesn't happen. Okay, let's hope that this doesn't happen. So the next we are going to check is option chain data. We have discussed in detail in this video regarding the option chain support and resistance, and there is a 1:30 p.m. strategy that we have discussed. You can visit our channel and watch that. So on the option chain, we see here major support is at 17,000. So 17,000 has highest number of put writers. So 37 lakh put writers. 37 lakh put writers are present on 17,000. So this is the major support, and 17,500 is a major resistance. So don't expect Nifty to go beyond these levels. If it goes, then it will retrace back. Okay, so let's say tomorrow if it breaks 17,000, which is nearly impossible, but nothing can be guaranteed. If it breaks that level, it will go somewhere, let's say 17,980, sorry, 16,980 to 950 levels, and then sharp upside it would give around 100 points. It would give and expire above 17,000. That is the one thing that it can do. Okay, the major supports on the expiry day works very well. Okay, you don't keep a doubt on that, because if the support is broken, then it will pull back sharply and expire above 17,000. Same case with 17,500. If it goes, let's say 17,550 or 520 or 550, then in that case it will pull back downside. It will give sharp downside, let's say 17,400. It will drop towards those levels, and then it would expire somewhere near 17,400 and 500 levels. So major support and resistances are key levels. But tomorrow's session, I'm not expecting those two levels to be touched. Even like there is a chance to hit 17,500, because there is a good call writers, heavy call writers are there, and we are expecting upside. In that case, 17,300 call writers would exit their position, triggering the short covering rally for towards 17,500. So that is one thing that we can assume for the upside tomorrow. So as you can see here, 17,300 is a second major resistance. Okay, first major resistance is 17,500. 17,300 is a second major resistance. So there should be an action between second major resistance, like near to this strike, and second major support. So second major support, you could say 17,300 itself is a second major support. On the put side, this is the second highest number after 17,000, right? So after 17,000, 17,300 is itself a second major support. So good gap up opening above 17,000 or near 17,300, and then break of 17,308 or 9, we could go at least 100 points up, 17,400. Then even it can cross 17,500, and it can expire near 17,500. That is the best case scenario for upside that I'm expecting. So this even could get aggressive, and this number could increase and go beyond this number. Okay, so most of these are expected to cover their position, 17,300 call writers, because the upside could be coming for tomorrow. If it is flat, then it would end near somewhere near 17,400 and 300 levels. So that's how we read the option chain data. So more details will be given during the live market on our channel. So yeah, make sure you subscribe to the channel, stay connected with us for more such educational videos. By the way, this is just an educational video, not an investment advice. You could lose your all capital during the expiry date trades. So take care, don't go heavy on tomorrow's like for tomorrow's expiry. Don't trade heavy, because a lot of stop loss it could be there. So take care, have a good day, bye bye.